Welcome to today's video where I'll be discussing psychological price levels and round numbers in Forex trading. I'll explore why these levels are important and how to use them effectively in your trading strategy. So let's dive right in. First, let's define what are psychological price levels. Well, they're price points at which traders tend to place orders, leading to significant buying or selling pressure. And these levels are often found at round numbers like 1.00 in the Euro-USD currency pair or 1.30 in the GBP-USD currency pair. But have you wondered, why do psychological price levels form? Well, one simple reason is that many traders often place their orders at these round numbers. Now, this behavior is due to the human tendency to gravitate towards simplicity and predictability. Now, let's talk about the importance of psychological price levels. As traders place orders near round numbers, it creates a self-fulfilling prophecy. The more traders who believe in these levels, the stronger that they become, acting as support and resistance points in the market. Now, although we can't cite a specific research study in this video, many experienced traders have observed this phenomenon in action. Next, let's learn how to identify psychological price levels. Now, these levels are relatively easy to spot as they are usually round numbers ending in 00 or 000. Now, for example, in Bitcoin, you might notice that the price often bounces off of round prices like 20,000 or 30,000. Similarly, gold prices have shown a tendency to respect round numbers like $1,000 or $2,000 per ounce. To find psychological levels in Forex trading, you can look for round numbers on the currency pairs that you trade. Now, keep an eye on price action near these price levels as it can provide valuable insights into market sentiment and potential entry or exit points. Finally, let's talk about risk management and practical tips for using psychological price levels in your trading. Now, understanding these levels can help you make better trading decisions and manage your risk more effectively. For example, set your take profit order slightly below a psychological price level for long positions or above psychological price levels for short positions in order to increase the likelihood of your take profit order being hit. Now, for example, if you're long on Euro-USD and the psychological price level is at 1.2000, you might want to set your take profit at 1.190. Also, similar to take profit orders, you can adjust your stop loss orders to account for psychological price levels. Now, for example, place your stop loss a little further below the psychological level for long positions or above the psychological level for short positions to avoid being stopped out by sudden market fluctuations. In addition, you can use psychological price levels as entry buy points. For example, if the price reaches a psychological price level and proceeds to continue going higher above the level, it might signal a good opportunity to enter the market as the price attracts new buyers into the market. Now, to increase the accuracy of your trades, use psychological levels in conjunction with other technical analysis tools like trend lines, support and resistance levels, and chart patterns. Let me show you a few examples. Here's a chart of the currency pair, the Euro versus the USD. Now, you can see that from 2015 to 2017, the Euro-USD refuses to fall or stay below the psychological price level of 1.05000. Now, this means that every time the price reaches this important price level, you will see buyers come in and support the price. Another example is the US dollar versus the Japanese yen currency pair. Now, here you can see that from the latter part of 2014 to the middle of 2015, the US versus Japanese yen can't break above the psychological price level of 1.22.000. Now this means that every time the price reaches this important price level, you will see sellers come in and push the price lower. One more example is gold. Now more recently, from 2020 to 2023, gold prices have failed to stay above $2,000 per ounce, as once again sellers appear to limit the price appreciation of gold. By understanding the importance of psychological price levels and incorporating them into your trading strategy, you can potentially improve your decision making and risk management. Now remember, the key to success in trading is combining knowledge, experience, and discipline all together. If you found this video helpful, don't forget to like, comment, and subscribe for more insightful content on Forex trading and other financial topics. And if you have any questions or suggestions for future videos, please feel free to leave them in the comments below. Thanks for watching, and I'll see you in the next video. Happy trading!